Welcome to the Intel Real Estate Investment Club. Today is the first week of June. It's June 3rd, and we're going to have open discussion for about 30 minutes. No agenda. Does anybody have a question or thought? What do you guys think of interest rates right now? Are you inclined to slow down on purchases? Do you think that inflation is going to go, offset the increased interest rates? Do you have any fears right now in purchasing, or any, or do you think it's a great time to purchase? I guess I should have primed the group with some questions before now.
I don't know, Daniel. It seems to me that, when we have these cycles like this, typically the interest rates start driving prices down. We can see evidence already, at least I see it in my market in Phoenix, at least, that, we've been really, really hot with a lot of appreciation. And now we're starting to see a decline, let's call it a slowdown or whatever you want to call it, in terms of a decline in offers over asking price, the cash onlys, the multiple offers, all that usual sort of first signs of steps that you start to see a market cooling. I know some people say this is more like an inflection point as opposed to a top. I'm not so sure that I would subscribe to that, but it's definitely causing compression, I think, in finding investable assets, for sure.
I just had an investor friend tell me that they got an investor loan, so 25% down on a single family home. Their interest rate was 7.25%. Yeah, 7.25%. I don't know what they did to shop that around. That was just news I heard. We actually went and contacted the bank that I have out in Idaho, or that I've been working with. It's a small community bank, and they were quoting me 6% for investor loans. So interest rates are definitely going up. I think banks are seeing a lot of uncertainty in the environment, and they're increasing their spread between what they charge and the Fed rates that the Fed charges them. One of the other topics I want to throw out there is, do you have a trust? I've been looking more and more at trusts, and I'm starting to get more questions about that. The other thing that I've been getting a lot of questions about are REITs recently. Does anybody have a REIT that they really like, or an experience with their trust? I recently set up a trust. Go ahead.
I was going to say, on the interest rates, Glenn, I'm with you. I'm seeing also, I talked to this guy who owns a bunch of lumber companies, and lumber sort of is I would think, a leading indicator for housing. And he was saying he's seeing a lot of big customers who are basically sort of pausing, they're putting the skids on, the crazy build. So, leading indicators is always interesting to see what's going to happen, right? But the flip side is, if you build fewer homes, then there's fewer inventory. So I don't know. Personally, I'm out of the market. I'm not looking for a residential housing right now. I think it's too hot. It seems very bubblish. But on the trust, we started up a trust 6-7 years ago, and we did it because we were told, not so much from an asset protection standpoint while you're alive, but when you pass, the U.S. is really good at taking a good portion of your assets, which you've already paid taxes on. So we set up a trust, and our kids are part of the trust, and the trust lives on. So if my wife and I were to pass, right, the trust just continues to live on. For those of you guys who have the Intel Hyde legal plan, the Hyde legal actually covers wills, trusts, advanced directives, but you have to generally go through the in-network. And I think some people at Intel have had good experience. We went to a couple that were really sketchy. We're like, we're not, this is very depressing. We don't want to be in here. So we ended up finding our own attorney. And if you ask Hyde nicely, they'll send you a list of what they cover and how much they'll cover. So they actually have out-of-network coverage as well. And you've got to be good at paperwork, because you call them, they'll answer the phone right away, and they'll give you like 6 different numbers you've got to bill against. and it takes a couple of hours to sort of do it. But I think they covered maybe $1,200 out of $1,600 is what it cost us to do a trust, will, advance directive. There's some other depressing stuff in there as well. But yeah, if you haven't done a trust for it, I would definitely recommend it. And then the next part is you take all of your assets, homes, cars, bank accounts, investments, and you put them in the name of the trust. And that takes a while.
So I just had a friend.
Sorry, can I ask a question real quick? I assume you're talking about the living trust, not the irreversible, irrevocable trust.
Yeah, so we looked into the irrevocable trust, and the word irrevocable means you can never revoke it. So our attorney's like, don't do the irrevocable trust. And by the way, we hired somebody who's she's actually a probate litigation attorney. So she's in Oregon. I'm happy to give a reference to anybody in Oregon. So the trial attorneys are almost always the best attorneys, right? Because they're actually arguing the case in court. So she recommended against a irrevocable trust. So we have a revocable trust.
And so I actually used Intel's legal insurance plan to set up my trust as well. Got the little handy trust book. I don't know if you can see this, but this came from the Hillsborough Law Group up here near Ronler Acres and Jones Farm. And if anybody knows where Elam Young Parkway is, it's right there, right in between Ronler Acres and Jones Farm, and that's where this law group was. And it was just a basic Oregon living trust. I paid a total of $364 for it. And it came with all the other depressing documents that Ashish mentioned, such as, who decides when to pull the plug and who's my next of kin and all those sorts of things. So it was certainly for $364, a great service. But it's a basic trust, really basic trust. And we're going through, and now we're going to go through and do an inventory of our house and put our furniture and other things inside it.
I just had a friend of mine 2 days ago tell me that they're using the same Intel Legal Services for setting up their trust. This is a family of 4. I wouldn't say super complicated, environment or tons of assets to try and deal with. But what they told me was that the attorney that's in network that they're using as part of the legal services plan from Intel, that attorney said their normal fee is $4,500 to do the entire trust set, which includes not only setting up the trust docs and all the things that Ashish described and all the fun questions you don't really want to answer, but also the things of doing the actual asset transfer and moving it into other names, getting accounts set up, all that stuff. So it was like a $4,500 total cost. And then within, they've got some sort of contracted rate with the Intel legal plan that they get whatever fee that is presumably somewhat reduced, but he didn't say what it was. That covers everything except for the actual asset transfer itself. So if you want to do the asset transfer, he charged my friend $750. And so that was his out-of-pocket total for doing the entire setup, which included all the transfers. So you can, if you want to do $0, you can do $0 and do all the transfer stuff yourself and set those pieces up. I'll do the rest of the legal paperwork to get your trust initiated. But if you want me to do everything, then it's $750, and that's what they're doing. And that's here in, I'm in Chandler.
One of the notable things is that the Hillsborough Law Group said we didn't put any of my business assets in the trust. This is all just personal assets. The business itself, of course, is its own legal entity. And you can put it in the trust, and there's lots of interesting stacking options you can do with putting entities inside entities. But at least for purposes of inheritance, if you have other people on your board of directors, they're going to be running the company after you pass away. Or if you want to put your kids, in a position, you have like a family LLC, that is an option too. So we just put our house and personal assets in the trust and not any of our business and real estate businesses.
Hi, this is Henry, also in Chandler. So we had set up a real estate trust also with the Intel Higher Legal Plan. and it was like Glenn mentioned, it was free, right? But the actual transfer of assets, I mean, usually like for a house, it's kind of like a quick deed of claim, something like that. It's only like $10 for that, right? So if you want to transfer your own assets, it's almost fairly inexpensive. All you have to do is just go to the bank and submit your real estate trust thing, and then they look at the paperwork, everything's good, then you sure that's free. It's just like with the house, you have to do the quick claim deed, and they'll charge you $10 for that typically.
So you do the transfer of the house through your bank?
No, the transfer of the house is through a title company.
Oh, okay. And the title company charge you only $10?
Yeah.
Oh, okay.
So we didn't have to pay this, $700. Maybe that was more involved. If you want to transfer your bank accounts, you could just go there to the bank and show them the paperwork, right? And then you do that for free. And then for the car, the title of the car probably something similar to that too, I would assume.
Yeah, you can transfer a house to a trust or an LLC if you do it yourself really inexpensively, just going down to the county recorder's office. I've actually sold a house for a total of $25 just by walking down there and filling out the paperwork and doing it.
Hopefully that wasn't the sale price, Daniel.
That was not the sales price. No, that was the recording price. County recorder's fee.
Yeah, Glenn, I had a quick question. When you were mentioning, you mentioned $4,500, and then you mentioned also $750. Maybe I missed something in the middle.
Yeah, sure.
Sorry.
So what this is not my experience, it's my friend, so I'm just I'm playing a bit of telephone here, but
numbers.
Yeah. So what my friend told me is, if you walk into this attorney's office off the street and say, I want a trust, this attorney will tell you it's $4,500 for the entire, I'll do everything for you. That's his fee. Then this same attorney also is part of the Intel legal network for this insurance type plan that we have.
I'm with you.
So they get some sort of contracted rate through the Intel plan that they get less than $4,500. They didn't tell how much it was.
Sure.
So they separate. So what he did is he separated and said what's covered inside the Intel plan is the creation of the trust and all the legal paperwork for that. The transfer the assets into the trust, car, house, bank accounts, whatever, is not included in that first section. So you can do that. I didn't see who it was. Someone else was just describing it, that you can go down to the courthouse, do it yourself, or go to the bank. And so if you want to do that work, you effectively can get the trust set up through the Intel Hyatt service for free. If you want to have someone else do all of those transfers and account setups, this guy said he would charge $750 to take care of that, call it convenience fee or whatever you want to cover it. And so you're just paying for his time.
I see. And
is that more understanding?
Yeah, sorry. Yeah. And as you said, if you go directly to a lawyer outside or an attorney outside, his charges were nominal, like $4,500.
That's what this attorney said that his rate was. I haven't priced it in other places, but that's what his rate was. Yeah.
Super. Okay, quick question. Anybody, or maybe Daniel or somebody, any Intel legal information that you can pass?
Just go to Circuit and look under My Benefits, and you could find legal plans. And if you're a blue badge, it'll be right there.
Cool. Right.
It's done through MetLife, and I believe it's called Met Law.
All right. Thanks.
So I think you do have to do it through open enrollment. You can't just go get it at any time. It's part of the annual enrollment. Is that? I think that's right.
I think that is right.
So you'd have to wait until this fall to sign up if you're not already participating, and then you could use the services starting January of next year. And I don't remember, it's something like $8 or something like that per
17 for this last year, for at least mine. That's what I paid for it, 17 a month.
Yeah, I was gonna say 8 a paycheck. So yeah,
Okay, yeah.
pretty close. Yep.
Yeah. So you have to wait till October. October is when open enrollment will happen, and that's when you can sign up for the higher legal plan. And then, like Daniel mentioned, $17 per month. But like you heard, that if you multiply that times 12, right, so about $300 some. It's cheaper than the $3,000 to $5,000 to set up a real the trust fund. So it's worth it.
I think the Hillsborough Law Group quoted 3,300 if we weren't using the Met Law insurance. So yeah, I signed up this year just to do that one thing.
Thank you again.
Daniel, this is Austin. I had a question going back to the interest rates and, just the general consensus everyone has. I actually had a question on margin loans. Like if anybody has taken advantage or has tried margin loans through like a brokerage, the rates, prior to the rate hikes, they were extremely low. You could get loans for like 1% or less. Now that the rates have started going up, it's, they're increasing, but there's kind of the baseline federal rate plus some index that the brokerages usually charge. But it's, looking at like 6-7%, it's still way below that. They're probably like in the 3% or high 2s, something like that. So I'm just curious if anybody has tried those and any experience with those margin loans.
We actually do have a video that was done by John. I'll have to look up his last name, but he was actually using margin loans from his stock account, his RSUs, borrowing against his RSUs, and then using that in order to finance real estate. And he had a really good talk with lots of figures. I'll find the exact link in just a moment.
Okay. Is it the one, he was from Apple? Is that right?
He was from Apple, yes.
Okay. Yeah, I think I did watch that. I was just curious in here if anybody had, since it's kind of an open discussion, anybody had any feedback or anybody's tried it, had any experience there.
I guess a similar question too would be in 1920 when the CARES Act passed, did anybody take advantage of that in order to borrow from their 401k? And what did you do with that if you did? If you wouldn't mind sharing.
Did you say, sorry, oh, you're talking about recession, not the depression. Sorry. I was a little not born then.
So any experience with borrowing against an account to fund a real estate project? All right.
I've borrowed against my 401k in the past for doing like, renovations to my house, and it wasn't for an investment purpose, but there's definitely a mechanism to do this. I've got friends who try to time the market by doing this as a way to actually extract money out of the market, since you're effectively paying the interest back to yourself, as a way to hedge what would be a declining market for the max you can at least pull out, which I haven't done in a long time, but it used to be like 50,000, I think was the max you could do. They also didn't have a lot of success with it, to be honest, trying to time the market, but they definitely, I do know people who have tried to do this.
So we have somebody who's asking, please share more details about the CARES Act that passed. And we actually had a CPA come in, Amanda Hahn, and you can go look on the previous speakers to find her as well. But there were many provisions obviously in the CARES Act, but one of the things that it did was that it allowed you to take up to, I believe it was $100,000 from your 401k tax-free, as long as it is repaid within 3 years. And then you're also able to borrow a certain amount on top of withdrawing that there was a withdraw category and a borrow against category. And the borrowing, I believe, had a similar timeline for paying it back. And the idea was to provide a temporary, relief for people who were out of work or needed extra money, just wanted to be able to draw upon their 401k now without penalties, and they would pay it back in a short time frame. And Amanda Hahn goes over all of that. And the previous person, his name was John Tapley.
Okay, what's the difference between borrow and withdraw if you're paying them back?
So if you that's a really good question. I'm not exactly sure what the difference would be. You're still credited with having that. It's just a loan rather than a withdrawal.
Hey,
So
Daniel.
maybe I misunderstood, but the difference between borrowing from 401k and withdrawing, you just pay the fees and you don't get a chance to pay it back. You're just literally withdrawing and potentially paying a penalty if you're not at the retirement age. Withdrawing, I assume you don't pay a penalty. Sorry, loan, you don't pay a penalty, but you have to pay it back with interest.
Right.
And the interest goes to your account. You're not paying anyone else.
Yeah, Jenny, you can find all of our recordings, including the recording of Lauren, who just joined us. You'll be able to find that in our previous speakers Hall of Fame page, which is up at our Real Estate Investment Club SharePoint site.
Is there a way you could walk us through how to get to it?
Yeah.
I tried and I'm lost.
Okay.
Sorry.
So I'm actually not connected to the VPN. Otherwise, I would share my screen. But here is the link to the internal Real Estate Club site. And if you go over to the left sidebar and just find previous speakers, you'll find photos of everybody that we've had in every Friday almost for the past 2.5 years. So you can find speakers there, a lot of people that Lauren would know in the real estate community, a lot of people on every topic. There was, flippers, homesteaders, wholesalers, people talking about REITs, people talking about retirement, self-funded IRAs, self-directed IRAs, lots of multifamily syndicators and commercial property operators. There's a wealth of information there. All right.
I think I got it. Thank you.
Any last questions wrapping up our discussion about trusts? And then I'll introduce Lauren. Or maybe.
I have a question, but not about trust, still about a loan. So recently I'm trying to get a loan, and one of the lender introduced something called all-in-one loan. I don't know if you guys are familiar with all-in-one loan or not. So yeah, basically what you're gonna do is they're gonna set up a loan account for you. The loan account is kind of like a bank account. You put money in there, but you can also withdraw the money out. But the more money you put in there, they will do the daily adjustment based on the money in the account, adjust your interest rate. You can still use the money out, just like a regular bank account. They will do all this setup for you. But the idea is the more money you put in there, for example, if you set up a direct deposit, the more money you put into that account, the interest rate will be adjusted because that money goes to your principal, not your interest. So sounds like a very good idea. Just not sure if anyone has tried that, can, provide some information. Is that a good idea? Is that a bad idea?
Which
What are
bank?
the rates?
Yeah, in which bank?
I think the bank is called Western Alliance. It's a smaller kind of credit union, regional type of bank. Apparently they have been doing that for a while. I did a little bit of research on YouTube. Looks like they started sometime around 2015. Wasn't very popular, and then they rebranded, did a lot more marketing, and sounds like this lender really pushing hard for this all-in-one. Numbers looks right. I just don't know if any gotcha later or not. So.
And I missed it. Sorry. This is effectively like a bank account that's just generating interest, or you're using also loans as part of this system?
No, you're not using a loan as a part of the system. It's just using the money you deposit into their account. That money you deposit is going towards your principal. Well, that's my understanding at least. But you can also go out of it, right? So
Your principal of what?
your principal, the money you borrow,
The loan principal.
the loan.
Yeah, so that's why I'm asking you. This is, you're generating a loan and you're also putting cash into a bank account and drawing from, they're generating you an interest spread on that.
No, this is just like, it's not they putting a loan money into the account. It is a loan you have to pay back, but you pay back into their account.
Mm.
Do you think that there is a person that you could put us in contact with and that could come in and speak about all-in-one loans? Sounds like an interesting topic. I would at least want to learn more about it.
I can definitely ask.
Okay. If you can find somebody, we'll try and get them in as a speaker.
Sure. Okay.
All right. And with that, I'm going to hand it over to Lauren. And Lauren, how do you say your last name?
Bryshell.
Bryshell. Okay, excellent. And Lauren is from the Spartan Investment Group, which is a group out of Colorado. They are well known within the real estate investment community for being self-storage funds. And of course, Ben Lupitus is often one of the hosts of the Best Ever Conference, which happens usually in February's. I've had Ben on my podcast before. He's a great speaker and he gives a lot of his time. And apparently Lauren does too. So here you are, Lauren. Welcome to the group.
Thank you so much, Daniel, for having me. I'm really excited to be here today. All right, so I will share my screen here and let's see, hopefully it's always kind of fun seeing which one will pop up. So let's do this. Let's share screen 2. All right. Can you all see my slide there?
We can.
Perfect. All right, well, let's get started here. So today I am going to talk about why self-storage is a great investment, kind of an alternative investment to other asset classes that you might think of when investing in real estate. So let's start off with a fun fact. Did you know that there are more self-storage facilities in the US than all of the Starbucks, McDonald's, Burger Kings, and all of the fast food chains combined? In fact, there are over 60,000 storage facilities nationwide, which is more than all of them combined. So I personally, like Daniel just mentioned, I live in Denver. And as soon as you drive downtown Denver, the first thing you see when you're coming from the east is a giant Class A green box storage facility that's right there, neon green. So maybe it's just me and I notice them everywhere because I work in the industry, but once you start looking for them, you'll see them on every corner. Another fun fact is that 1 in 10 Americans have a self-storage unit and 66% of those people also have a garage. So people really love their stuff. So has anyone here seen the show Tidying Up by Marie Kondo on Netflix? Well, for those of you who have not, maybe, it's about a woman who goes into Americans' homes and she helps them clean up their stuff. People really have an attachment to their stuff. And Marie says, if it doesn't bring you joy, put it in self-storage on autopay, which, you know, all joking aside, Marie doesn't actually say that, but that's what we say, because that's what people do. They fill up their garages, their homes with things, and that's the way it goes. So, quick introduction on me. This is my little family. I work in investor relations at Spartan Investment Group. I've been out here for about 3 years with the firm, and on a daily basis, I talk with new and existing investors about investing in storage and all the benefits. And when I first got into the industry, I wondered myself, you know, why self-storage? I don't understand why this is such a big deal. Who uses self-storage anyways? Because me, as a minimalist millennial, I didn't use self-storage. So, you know, I live here in my high-rise alone, and I don't have a lot of stuff. I have a 1-bedroom apartment. But of course, when I moved to Denver from the East Coast, Florida specifically, I didn't know how to drive in the snow. And, you know, I can barely drive anyways. Nonetheless, add snow into the mix, it's a disaster. So I needed snow tires and I wanted to go skiing as well. And in the summers, I wanted to go kayaking. So I needed somewhere to put that stuff. And even me, the minimalist millennial, had to get a storage unit. So this is what my apartment would have looked like if I hadn't gone down the street and bought a 5x5 and rented it out for about probably almost 2 years before I just got rid of the car anyways and decided that I should just stay home when it snows. So this is what the average American storage unit actually looks like. It's a bunch of junk. You have the ladders, the boxes, the bikes, the extra car seat. This is truly what it is. Usually it's grandma's antiques. It's nothing of value. Most of you might have seen Storage Wars here and there, and they always find cool things in there worth a ton of money. That is not what we find. We have 54 storage assets across the country. We've never found anything that cool. So this is really what it looks like. So people with their activities, their snow tires, their average units that look like this. Life events, which can include a growing family, aging, relocation, downsizing, traveling the country. During COVID, I knew a lot of folks that packed up their home or apartment and moved to Hawaii, or took an RV trip across the country because they had the time and the opportunity. So all of these things, the life events and small businesses, which make up 30% of storage customers, is really what contributes to the industry. So people who have staging companies, food delivery, landscaping crews, things like that are make up a huge portion of the tenants. So for example, we have a lot of properties in Texas, and I'll go down there for some feasibility and due diligence trips. And what I'll notice is that the landscaping crews come in the morning, they pick up their equipment, they take it out, go do their work for the day. And by the end of the day, around 4 o'clock, you'll see them coming back in, dropping their stuff off, and they repeat that every single day. So all of these things, again, the junk, the life events, the storage, or the small business customers, excuse me, have created a $39 billion industry. So self-storage has always been around, but it's really gained popularity with all sorts of different uses in the last little bit. Check out this performance over the last 15 years compared to other REITs and index funds. When we first were getting into storage in 2016, and I do realize, yes, this graph does end at 2016, we thought what goes up must come down. But the growth has been steady still over the last 6 years, and it has just been getting better and better. Even in economic downturns, over the last couple of GDP drops, storage occupancy has remained strong and pretty consistent. If you look there in 2009, when the GDP dropped to negative 2.5%, self-storage occupancy stayed steady at about 75% on average, which is much above break even, a stat usually around 60% depending on the property. Likewise, in 2020 there at the end of the graph, not a recession per se, but uncertain economic time that had the GDP drop to negative 3.5%, storage occupancy still stayed above 90%, which is considered as high as you'd want it to go in the industry. Anything really above 90 to 95% is you're probably not charging enough money for your units. 100% occupied isn't necessarily a great thing. Another thing we love about storage is that it's known to be pretty recession resistant and has been one of the best performing asset classes during the last 3 recessions, along with medical offices. And it's one of the least foreclosed upon real estate sectors. Now, I know everyone's tired of talking about COVID, but I get asked all the time, how did storage perform during the pandemic? And honestly, during COVID, it experienced a record number of customers and rates soared as people moved, downsized, their businesses closed, and people made room to work from home. This contributed to an over 12% rent growth during COVID-19, which is phenomenal and unheard of. You know, we project rents to grow steadily every year to keep up with inflation, rising rates, things like that, but over 12% was just astronomical. Another great thing about COVID or storage during COVID, anyone here a victim of the eviction moratorium rental laws or couldn't raise their rent? I know a lot of these cities would not let landlords charge late fees for late rent, would not let people move out if they couldn't pay. We didn't have any of that with storage because the government simply does not care about grandma's old stuff. Some other great things about storage. We don't have to deal with toilets. We have over 20,000 units and we probably have less than 100 toilets in our whole entire portfolio. No excessive property management. On a normal multifamily building, you might have 2 or 3 leasing people, some maintenance folks on site. At my building, downtown in Denver, we have the 24/7 concierge and security. So all of this overhead, we don't have to worry about that with storage. Expensive appliances. When fridges and stoves break, dishwashers, it's no fun to be fixing those. Same with water heaters. Again, eviction notices. We don't have to deal with any of that. Of course, we have local rental laws that we have to abide by, but they're nowhere near as serious as multifamily or single family. And there's no way to ruin our units upon exit. It's a concrete floor and metal walls. So good luck trying to punch the wall in. So let's look at these couple of asset classes that are pretty streamlined that people invest in either passively or actively. Self-storage has some great benefits here, but if you're looking at storage, multifamily, single family rentals, they're all tax advantaged. Tax advantages come from bonus depreciation or whatever else that you can get from them. The average stay is pretty long. Usually multifamily or single family is a 12-month lease. Self-storage is about anywhere from 24 to 36 months for our average tenant. Economies of scale, you can buy a big portfolio of storage in one transaction, same with multifamily, but it becomes really hard to scale 2,000 single family homes. And now we get into the self-storage benefits that we have solely here. Automation, we're able to automate every single facility we have. You can't really automate a multifamily. Can you imagine if someone came to the concierge in the middle of the night and it was just a little computer robot there? That wouldn't work. So we can automate everything. We only have about 1 property manager for every 4 facilities, keeping our overhead down because our economies of scale is so great in certain markets. Rent recapture. Again, we can evict people out of their units after 30 days of not paying, and we overlock their unit. Can you imagine if someone did that to your apartment? You came home after not paying and you couldn't get your stuff out, and then people auctioned your stuff off after that? That would make the news crazy. So we can take that rent recapture that we get from the auctions, put it towards the lost rent, and then get that unit back on the market. Lastly, low maintenance. Again, we really only need someone to come by the property a couple times a week to sweep out the turned over units and make sure that the land is looking good. But other than that, it's concrete pads, drive aisles, and an office sometimes that needs to be overseen. So we mainly focus on the value add sector of the risk return curve. Of course, on that curve, there are different types of storage units that you can invest in, the core, core plus, value add, or opportunistic. We've done kind of all of them, and they're all great options just depending on how risk adverse you are. There are endless ways that you can add value to storage, but here are a couple ways that we really like to add value. Adding brand new units. The first thing we do when working through feasibility is to see if there's extra parcel of land or a parking lot that comes with the land, and if we can add new units there. Of course, we look at the demand of the market. Demand per person in a market is usually about 7 square feet of storage per person. So looking for that demand within a 5, 7, and 10-minute drive time radius, looking at all the competitors, making sure that they're highly occupied and that they're charging decent rates to be able to float all these new units. But being able to add brand new units to storage is the easiest way to add value. And next, the next way that we add value is to close the gap between current and street rates. So if we go into a small market, we focus on secondary and tertiary, along with a lot of other operators who would invest in storage. Say a 5x5 unit is going for $30 a month, but the guy across the street is charging $80 a month. That's a $50 a month discrepancy that you're missing out on. So you go in and you raise the rent to $50 a month, not quite to market rate, but still better than you were getting before. So the tenant moves out. A lot of times we see these facilities will go in and the owners owned them since 1995. They've never raised the rents on their tenants, and their tenants have been there forever. So the tenant is upset and they move out. But honestly, it's great for us because then we can put that rental unit back on the market for $80 a month. So this is another great way to add value to your facility. Couple ancillary streams of revenue that we can do. So storage is great because it's so easy to, just depending on the market you're in or the facility itself, there's a ton of different ways you can add value, different streams of revenue. And so it takes a little bit of creativity and knowledge to be able to do this. But the number one thing that we do when we go in to add value and ancillary revenue to a unit is add tenant insurance. So we require this for all of our tenants. And we get 60% of the revenue from the tenant insurance. So we don't require people to use our tenant insurance necessarily. They could use their renters or whatever else they have, but it makes it very easy. It's a convenience factor. So let's say that it costs an average of $10 a month and it's a 300 unit facility. That equals about $1,800 a month after you take $6 back from it, which equals $21,000 a year, which boosts the NOI of the facility over $400,000. If you multiply that against a ton of facilities in a portfolio, just adding required tenant insurance makes a huge difference on your bottom line. Merchandise sales. Adding merchandise sales to your office when you're redoing your facility just really adds a layer of convenience for your tenants. It might not add, $400,000 of NOI to your bottom line, but having rolls of tape and extra boxes when people are moving back and forth makes it very easy if they've forgotten something. Another great way you can add storage or value to storage is boat, vehicle, and RV parking. So if you're doing your feasibility on your property and you have that extra parking lot or plot of land that just doesn't make sense to expand on with new units, here's a great option to cash flow the dirt. Next up, truck rentals. This particular truck here is a very fancy branded truck that we use at a Class A facility we have out in Washington. But on the facilities that we don't do these nice branded trucks, we do U-Haul rentals. Very easy for U-Haul to come in, drop their trucks there. We don't pay for the trucks. We just hand over the keys to the renters when they need them, and we take a cut of the profits. Lastly, cell phone towers are an out-of-the-box thing that we add to our facilities that doesn't add labor under us, but it cash flows. You can actually add your business to a list in the area that can be chosen as a prime location for a company to come in and add a cell tower to. So other than these top 5 ways, you can do notary services, UPX, FedEx drop-off, ice machines, vending machines, propane sales. The options are endless. So in conclusion, self-storage is a great asset class because it's easy to manage, maintain, evict, and is recession resistant. People need storage in economic upturns and downturns, and this is why we built our whole business around it. Thank you so much. Hopefully you learned something about storage, and I'm happy to answer any questions.
All right, if you have questions, go ahead and put them in the chat. We've got a couple of them that are here. The first one is from Glenn. Do you invest in multi-level storage units or only single-level storage units?
Yes, we do invest in multi-level. We've also built ground-up multi-level as well with elevators, which is fun because I don't know if you know or not, but every elevator out there is custom. There are no one-size-fits-all elevators.
This is an important question here. Ashish is asking, how do you differentiate yourself from other competitors in the market?
Sure. I would say the main way that we differentiate ourselves, 2 ways, is that we're completely vertically integrated. So we have our own construction company in-house and property management company in-house so that we control every aspect of the business to really get the timelines and budgets on our side. And also our feasibility and due diligence checkpoints are over 700 points. So we've spent years perfecting this and mitigating as many risks as possible. And we'll actually share that with you too as well if you'd like to see it.
Okay. Are there, other than having tight operating execution, in your business, is there any other way that a self-storage unit can make themselves distinguished amongst other competitors?
Great question. So actually, one of the ways that is very simple, but a lot of the things we find is when we're going in and buying these small mom and pop operators, most of these folks don't even have websites. They don't have their facility on Google. They don't even have someone answering the phone. So right off the bat, being able to distinguish yourself between the competitors in the area, having an easy to book and pay online website makes it easy for customers to find you, to streamline the processes, and having the online marketing presence as well really just sets you apart off the bat.
Okay. Another question we have here is, do units come with electrical outlets? And if so, do tenants have to pay their electrical bills?
Great question. Some of our units do have electric in them. They don't have to pay the electrical bills, but usually the electric isn't that much. People aren't allowed to live in the units. So, and we don't do the workshop types that you'll see now in Texas and places like that, where folks have their workshop or their RV in there full time. In that case, we would probably charge for electric, but we just have smaller units with an outlet or two.
Just to give you an idea of what electric might be used by, my neighbor, I go over to his house and play board games all the time, has a storage unit, and he paints, and he set up a little art gallery in his storage unit. So he turns on all the lights when he wants to bring somebody over there to sell a painting.
Nice.
All right.
I just went to a storage facility in Dallas for my son who just graduated, and we're moving him. So we're renting one for short term. And while I was there, down the aisle from the garage where I was loading things, is a business where someone details cars. So they've taken the light bulb, which is the only electrical source in the unit, unscrewed it and hung a electrical plug plus socket in between, and then ran a power strip from there to run all of their detailing equipment for their business, and then do the same thing like you were describing earlier, Lauren, about the landscapers, right? Takes off after, comes in the morning, leaves it in the afternoon, and just drives cars in, drives cars out.
Wow.
Uses the sewer and the water from the facility.
Right. What are the downsides of self-storage?
Great question. So downsides to storage, of course, if there were ever to be a brand new facility that came in right down the road that took a bunch of our tenants, that would definitely be a downside. We do try to mitigate that by looking at all the permitting in the pipeline and all the new plans coming into town, but that could be a downside. Natural disaster taking out your facility is a downside to any real estate, but that could be a downside. If, for example, rental rates, well, here's a good one. So we particularly focus on secondary and tertiary markets because REITs in the primary markets will have their pricing to do move-in specials and things like that all the time, which is a huge risk for mom and pop in smaller facilities like ours. Because if the public storage down the street cut their rates to $25, that's immediately going to take all of our customers and move them over there for the short time. And then what they'll do is a month or two later, they'll jack them back up again. So people are stuck. And that's one of the biggest risks we've seen so far and why we specifically avoid those markets. But other than that, generally self-storage is very stable. The occupancies are very steady and the cash flow is steady as well for the most part is what we've seen.
All right. Actually, going back to the question of natural disasters or the topic that you just brought up, do you carry insurance for what is in there, or do you require your renters to carry insurance? And is that an opportunity for, an extra revenue source for you?
Sure. So we require all the renters to carry insurance for their own personal belongings in the units, but we carry as much insurance as we possibly can on the buildings because especially in places in Texas and Florida where there could be flooding, tornadoes, hurricanes, things like that, we have maximum coverage because that's absolutely something that could happen. And we actually had a tornado hit one of our properties out in Texas. We also have loss of rent insurance as well for worst case scenarios like that.
Do you actually sell the insurance? Are you a broker of the insurance to your renters? Do you take a brokerage fee doing that, or do you just refer them to third parties?
So we partnered up with a third party that we take a cut from them, but we are not the broker. So we bring them in as like a partner.
Okay, finder fee.
Yep.
Okay. All right, Glenn, I think this question was answered, but are you a direct operator?
We are, yes. We are owner operators. And we have limited partners come in and invest alongside of us at lower minimums than going to buy their own facility.
All right. Can you tell us about some cases where tenants are abusing their storage units?
Sure. Well, we've had some crazy things happen. Nothing too detrimental, which is good, but we've absolutely had some people living in them, trying to sell drugs out of them. That is the one benefit of having a floating property manager around and having security footage everywhere, is that we can see what's happening at the facilities and shut it down as soon as possible.
Do you have to have drug sniffing dogs or anything like that?
I don't think we've had that yet.
Okay.
It's pretty, people aren't very smart. Sometimes it's pretty clear to see when there's sketchy activity going on.
You're just monitoring the hallways, right? Are you monitoring the individual units or just
Not
the
the
hall?
individual units. Yep, either the hallways or the entire parking lot. Sometimes we have internal units, sometimes it's all external facing, so it's very easy to see just with general cameras.
All right. Any restrictions on cell phone towers from neighbors, and how much money do cell phone towers pay?
Great question. I'd have to look into that stat specifically. Depending on the location, though, there are some restrictions. Not every facility is a great fit for cell phone towers. We do register each facility within that market just in case it is a good fit. But I have to get back to you on exactly how much they pay. That's a good question.
I can add a little detail there. So I think a lot of you know that I'm a multifamily operator, and we've got 13 properties now, and we've looked into putting cell phone towers on that land. AT&T said that they required 100 square feet in order to place a cell phone tower, and of course a lot of regulations all had to be met with and complied. But they were paying upwards of $9,000 to $10,000 a month for the cell phone tower. So it would have really boosted our investor returns putting a cell phone tower in.
That's great.
Okay, what are the capital requirements? And I assume this means for building a new storage facility. Maybe
Yeah.
Kumar, you could elaborate a little. Actually,
So,
go ahead.
No, you go ahead.
I was going to say, while he's elaborating, maybe I'll read another question. How often do units have climate control?
I would say about 60% of the time. I would say half of our buildings in general have both climate and non-climate controlled. Some of them are fully climate controlled. And some in specific markets like Seattle that don't need it are not climate controlled at all. So it really just depends on the area.
All right. John is asking, what are your recommendations for getting started? I assume he means as an investor, or maybe he's trying to be an operator. I'm not sure.
Sure. I would say I'll give kind of both scenarios. As an active investor, I would look at kind of the markets that you want to focus in. That's important. We focus on high growth markets because where the people are migrating is where the storage is needed. So pinpoint a market that you understand and then really dive into that market, do a ton of competitor analysis, make sure you understand the numbers and understand the underwriting on what's going to work for you and what your overhead is and how much you can charge for these units and how much you can increase it per year. Really, it's just diving very deep into it and mitigating a lot of risks on the permitting side. And if you're planning to add more units, make sure you understand the environmentals and the phase 1, 2s, and whatever needs to go into those processes. We also have a minimum square footage that we'll even look at. So 40,000 square feet is our minimum that we'll even consider, just because the numbers don't make sense for us from there. So it'll depend on if you want to manage it yourself, if you're planning on having a third-party property management company come in. There are a ton of different things to look at, honestly. And I could send you, like I said, that tracker that we look at, 700 points to check through to see if it's a good facility for us or not, because it's very thorough.
And I just noticed we have 2 minutes left. So 1 or 2 more questions, and I see you've already got your information here, so that's great. Kate is asking, what are the key risks?
Sure. So the risk that we kind of talked about earlier, of course, for our limited investors, it is real estate, so it's always a risky investment. I mean, you could technically lose all your money, but the risks have to do with new competitors coming into the market, natural disasters, things like that is really the top high level risks. Other than that, it's a pretty stable industry.
Would I be, I'm kind of in my mind thinking the top risk would be competition from oversupply of storage units in the market.
Yep, there are definitely some markets that are oversaturated and you would not want to invest there because your tenants are probably going to be going elsewhere to another competitor. Absolutely.
Okay. Do you have difficulties when people go through divorce in figuring out how to see units through metal divide? Do you have to divide the units? I guess, are there any situations that come up in families where, items are in dispute?
Yeah, great question. So more death than divorce. So a lot of times the children will be fighting over the will and want to get access to the unit before the other one. And there's a lot of procedures that we have to follow with that. We have to make sure that the will is followed and that whoever is next in line gets access first. We won't just give access to anyone who has the same family name. So we see a lot of drama actually around deaths of parents and things like that.
Okay. And I see there's a couple other questions about investing with Spartan. I'm going to let the people that want to do that contact Lauren. And everybody, could you take yourselves off mute and thank Lauren for coming and sharing with us?
Thanks, Lauren.
Thank you.
Thank you.
Awesome.
Thank you.
Thank you very much.
Very interesting. Thank you, Lauren.
Thank you so much.
All right. And
Thank you.
Lauren, I guess I would notice that you were recently in a mastermind down in
Thank you.
Malibu, California.
I was.
I'm in Jillian Sidoti's and Annie Dickerson's masterminds. So
great.
I saw it on their Facebook page, and we've had Anna Kelly. She was a speaker in here like 3 weeks ago, I think,
Okay.
and quite a few others. Ashley Wilson's been here. So I noticed that, I think a couple weeks ago, I saw that go by on Facebook.
Yes, that
So
was a fun mastermind. They're all such great women. They're very inspirational. So
that's awesome.
yeah. Well,
All
thank you
right.
so much for having me. Happy to answer any other questions offline. If you got my email there, and here for you. So thank you so much, Daniel.
All right. Have a wonderful weekend, everyone.
Thank you too. Bye, guys.